The IMF raises the red flag, slashes global growth for 2015 to 3.1%, also cuts India's forecast to 7.3%, expects India's GDP to remain sub 8% till 2020.
Acche then seems far, far away. The Centre for Monitoring the Indian Economy says stalled projects have jumped by over 1 lakh crore rupees in just the second quarter of this fiscal. New projects are also slowing down.
After RBI and SEBI, 3 more regulators bat for Aadhaar. The insurance, pension and telecom regulators move the Supreme Court, seeking to use the unique ID card for selling products and services. An interim order expected tomorrow.
The centre may include conditions to curb call drops in the next round of spectrum auctions. This after the Supreme Court questioned the government on the issue.
Markets gain for the 5th straight day as bulls continue to regain lost ground. The Sensex surges nearly 150 points. Profit booking in banks and IT stocks limit the gains.
If the 5 and 20 rule is not achieving its outcome, then we think we need to revisit that rule.
Make it easier for new airlines to fly abroad, says the director of Vistara, Mukundrajan. The Centre for Asia Pacific Aviation Projects, ACAPA, says the sector will grow tenfold and can contribute $250 billion to India's GDP, but all this only if reforms start to take shape.
The Centre for Science and Environment rings the alarm bells on air pollution in Delhi, says the number of trucks entering the national capital are a whopping 70% more than the civic body's estimates.
Meru Cabs is plotting to catch up with Uber and Ola, all set to raise funds of about $200 million from global investors. This will be Meru's largest fundraising till date. That's a CNBC TV 18 exclusive.
A Snap deal making a move to acquire Jabong. CEO Kunal Bahel says the company will take a call on the need for a standalone fashion platform in 2 to 3 months. That's another exclusive.
Crucial, actually, to make films about these people. You know, there are so many of them. They've changed the world in literally 40 years.
And film director Danny Boyle speaks about the controversy surrounding the new Steve Jobs movie.
We have introduced the GST bill in Parliament. We are hopeful to roll it out in 2016.
There's a lot of confidence on both sides on the opportunities and how we can cooperate on manufacturing, digital, and a number of other areas, defense and a number of other areas.
I think there is a whole lot of improvement and stability in the macroeconomic factors that stands out very positively.
The Germans had pretty candid conversation about some of the issues that they faced in doing business in India.
I think it's an opportunity to work with German companies, leverage their technologies in terms of promoting digital India, smart cities, make in India and so on.
Well, Bengaluru is a perfect fusion of German engineering and India's IT expertise. That's the word from German Chancellor Angela Merkel, who was in India's startup capital today. Prime Minister Modi and Merkel met the who's who of India and pledged to make life simpler for companies. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nantara.
Hi, Shiri. So all of that looks really good, but on the flip side, the macro is not looking good. IMF cutting growth forecast and apparently stalled projects are on the rise.
Absolutely. So let's get straight to that. The IMF is our top focus tonight. But before we get to that, here's a quick check of the day's trading action. The bulls continue to maintain the winning momentum, and the markets did rally for the 5th straight day. The Nifty gained nearly 0.5%, and it now is comfortably above the 8,100 level. Let's talk about the Sensex, which gained about 150 points. It's now moved within kissing distance of 27,000. Mid-caps not far behind, with the mid-cap index marginally outperforming the blue chips. So the 5th straight day, the rally continues for our markets. But this is the top story on India Business Hour. The global economy is struggling to grow, and there does not appear to be a growth spurt in the offing this year. The International Monetary Fund has slashed its global growth forecast for 2015 to 3.1%. That's from the earlier projection of 3.3%. Let's talk about India. India has not been spared side either. The IMF has cut its growth projection for India from 7.5% to 7.3%. So India continues to be much better when you compare it to what's happening as far as other economies is concerned. But sub 8% growth is what the IMF continues to project for India. CNBC TV 18's Ritu Singh brings you the global growth outlook from the International Monetary Fund.
The collapse of the Lehman Brothers marked the start of the world's worst economic slowdown, and 6 years since, growth remains elusive. The International Monetary Fund's latest report on World Economic Outlook blames this on the weakness in some large emerging economies and oil-exporting countries. So the IMF has marked down global growth in 2015 to 3.1% from 3.3% projected in July. However, it has held out hope for growth to climb to 3.6% by 2016. In the IMF's view, the world economy is at the intersection of three big forces. 1. China's shifting focus from an investment-led economy to a consumption-led economy. 2. A fall in commodity prices. And 3. Global repercussions of the imminent interest rate hike in the United States. Given this situation, IMF expects advanced economies led by the US and the UK to grow at 2% in 2015 and 2.2% in 2016. Emerging economies, on the other hand, are set to witness a slowdown for the fifth year running. IMF projects growth in these economies to slow down to 4% in 2015 and rebounding to just 4.5% in 2016. Key risks include weak exports due to declining commodity prices and a sharp depreciation in the American dollar. The IMF also warns that the impact of China's slowdown on emerging economies may be far greater than initially estimated. India, which is expected to grow faster than other emerging economies, is not in for a carefree run either. IMF says it is revising India's growth forecast downwards to 7.3% for 2015. However, recent policy reforms, lower commodity prices, and a consequent pickup in investment should help growth tick higher to 7.5% by 2016, hitting 7.7% by 2020. The other good news for India is that consumer price inflation is expected to decline to 5.4% by 2015. The warning here is that the real policy rates will have to remain tight if medium-term inflation targets are to be met. In Mumbai, Ritu Singh.
And like Ritu was just pointing out in that story, China has cast a cloud on global growth. And just a short while back, the research director at IMF spoke about the impact China could have in the days to come and also the impending US Fed rate hike.
All of these risks point to the need for a policy upgrade that will increase resilience in the world economy. And these policy upgrades are needed not only in the emerging world, but in the advanced economies as well. In the emerging world, countries have to get ready for the Fed to move on interest rates. They can do so by improved surveillance of the financial sector, more discouragement of foreign exchange.
Well, that's the IMF red flagging areas of vulnerability as far as global growth is concerned. And speaking of risks, the Modi government has been working hard to increase investment in the country, while the numbers in the second quarter FY16 suggest that the investment cycle is beginning to turn. The change for now seems to be limited to intent and announcements. CMIE data shows that the number of stalled projects has actually risen to a multi-year high at the end of the September quarter. Naveen Shetty and Arvind Sukumar bring you the details.
The quantum of investments announced by India Inc. has risen almost twofold in the September quarter, from 1.2 lakh crore rupees to 3.5 lakh crore rupees. That's the good news, but unfortunately it ends there. While the headline number on investment announcements collated by the Centre for Monitoring India Economy, or CMIE, is a robust one, the devil is in the detail.
A large part of this new investment comes from one big investment show in Tamil Nadu. Which usually has a large number of these announcements coming in, whether it is in Gujarat or in Tamil Nadu or in any other state. So when this happens, there is usually a blip. So if you correct for the blip, there isn't much on the table really.
According to CMIE, while the value of investments announced is higher, the number of projects announced in the July-September period is lower than the preceding quarter. The September quarter witnessed around 500 project announcements as compared to around 700 in the June quarter.
The number of projects that have been announced in this quarter is low. So we have got a fall in the total number of projects that have been announced in the last quarter. So there isn't so much of confidence, really speaking, on the new investments coming up yet.
The situation with respect to stalled projects has also worsened. Stalled projects increased by over 1 lakh crore rupees to 9.8 lakh crore rupees in the second quarter of the year. That's the highest level since the 1990s. While Prime Minister Narendra Modi tries to woo industry as well as foreign investors to kickstart the capex cycle, CMIE's numbers are perhaps a reminder of the challenges that still confront India's economic revival. In Mumbai, with Naveen Shetty, Arvind Sukumar.
And it's not just the CMIE. CRISIL has also today sounded a warning, and it's to do with highway projects. The rating agency believes highway projects worth over 67,000 crore rupees that are under high risk. All of these are under construction. Another 25,800 crore rupees worth of BOT projects are also at risk, mainly due to weak financial profile of the sponsors. CRISIL estimates that around 50% of these under construction projects are at high risk due to significant cost overruns. Let's shift focus now. The second day of German Chancellor Angela Merkel's visit to India saw her and the Prime Minister Narendra Modi meet with the who's who of corporate India in Bengaluru. Ideas to jumpstart bilateral trade between the two countries was high on the agenda. CNBC TV 18's Purnima Murli and Arundhati Ramanan get to that story.
While in Bengaluru, I must add that it is the software of India that will move the hardware across the world.
When in the IT capital, push technology. And what better way for the Prime Minister to do that than to promote his ambitious Digital India initiative? This time, the rhetoric was tailor-made for German Chancellor Angela Merkel's visit to the country, a push for greater Indo-German collaboration. And India Inc. lapped it up.
A lot of confidence on both sides on the opportunities and how we can cooperate on manufacturing, digital, and a number of other areas, defense and a number of other areas. I think we could visibly see a lot of aspiration from both sides.
I think it's an opportunity to work with German companies, leverage their technologies in terms of promoting Digital India, smart cities, Make in India and so on. So I think it's a good opportunity, and at the same time opportunity for Indian IT companies also to have expand their presence in the German market as well.
But the meeting went beyond just technology, and the issue that occupied mind space across the board was the ease of doing business in India.
The Germans had pretty candid conversation about some of the issues that they faced in doing business in India, but at the same time they were very reassured by the fact that the Prime Minister has made ease of doing business in India very foreseen for his government, as also the theme of Make in India.
India clearly stands out amongst the other nations in terms of all the improvement in the macroeconomic factors, whether it's the current account deficit, the fiscal deficit, the inflation, the easing interest regime, the currency performance vis-a-vis the other currencies in the world. So I think there is a whole lot of improvement and stability in the macroeconomic factors that stands out very positively. The other thing that stands out very positively is the intent and the direction to derive this move towards this ease of doing business.
Main purpose was the how to increase the bilateral trade, improve politically the relationship, and in general create an environment of friendship. That's the main purpose, and I think it was more than achieved, because there was a warmth on both sides.
Unlike earlier meetings where, you understood, had a nice lunch and, said goodbye, then you went away. This time there was a action agenda put for each of the issues that were raised as to, how it will be solved, how it will be looked at, who will look at it, and what kind of a time frame. So I think, we are, in my opinion, we are getting into a new phase of relationship with Germany. Make in India is probably the biggest game changer in this country that we have seen.
So far, Merkel's 3-day visit has seen a total of 18 MOUs being signed between Indian and German companies. But India and Germany are both clearly interested in a lot more. On this point, however, the message from the Eurozone nation is clear. India's Make in India and Digital India initiatives may have picked up steam, but the real action will begin only when a free trade agreement is signed, giving German companies a better platform to find a market here. With Purnima Murali in Bengaluru, in Mumbai, Arundhati Ramanan.
Well, those are the highlights of German Chancellor Angela Merkel's visit to India, which is now concluded. Speaking of trade, the Trans-Pacific Partnership Trade Deal, the TPP, which is a landmark development in global trade, will have a major impact on global trade and perhaps even on India's exports. We've got a special report on the TPP's implications for India and Indian exports, but that's coming up for you in just a bit. The Supreme Court may have ruled that Aadhaar cannot be made mandatory for government services, but various regulators are knocking at the apex court's door seeking clarity. Today, the pension fund regulator and the telecom regulator, that's the TRAI, have joined the list of regulators that are seeking clarifications from the Supreme Court on the validity of using the Aadhaar card. Ashmit joins us with the details of this. Ashmit, we now have 5 regulators moving the apex court. What is their plea?
Well, indeed, it's almost like a carpet bombing of the Supreme Court with applications from various regulators, 5 as you pointed out quite correctly. And as you had also pointed out, the Supreme Court in an earlier order, in August to be specific, had held in very clear terms that Aadhaar cannot be made mandatory, but it had allowed for a limited scope of use of Aadhaar as far as PDS is concerned. And that was a point of concern for the government, that PDS is just one, that there are a number of other schemes. They made references to Manrega, to Jan Dhan, and they made references to various schemes and argued before the apex court that if the benefits are to flow, especially to the rural masses, which number in the crores, it's crucial that Aadhaar is made a keystone in terms of identification, and then the flow of benefits is decided on that. And that was the primary argument of the government, which in fact has found support not just with the RBI and SEBI as we had earlier reported. Now we also have the likes of PFRDA, IRDA, as well as the telecom regulator TRAI coming out, lending their weight behind the government's arguments. The PFRDA has argued that for various accounts to be mobilized, for them to be made operational, Aadhaar allows for an easy, paperless means of identification and is fundamental to their plans of taking their plans forward. IRDA, of course, had argued that various products, if they are to be extended, Aadhaar again will become crucial in terms of that being used as an identification mark for the rural masses. Similar arguments also being raised by TRAI from a security perspective, that at the time of issuance of SIM cards, Aadhaar will act as a security net to ensure that these SIM cards are not misused. So again, multiple arguments being put forth before the apex court. Of course, they've taken time till tomorrow 3:30. That's when we can expect an interim order that will certainly give more direction on the road ahead that the government can take as far as application of Aadhaar is concerned. Back to you.
Okay, Ashmit, hang on, because I know that there's another story that you're tracking that also comes to us from the apex court. I will come back to you in just a bit, but staying with the Aadhaar story, I caught up with the Minister of State for Finance, Jayant Sinha, at the CNBC TV 18 Financial Inclusion Summit yesterday, and I asked him exactly this question, that since the Aadhaar was the very foundation of the government's JAM Trinity, what was the government contemplating doing to revive the constitutional bill to give Aadhaar the constitutional validity? Because as Ashmit was pointing out, practically every day this matter is now finding itself in court. Let's listen in.
All of us that are dealing with financial inclusion recognize that it's very important to have clarity on this matter. And there are 2 ways of dealing with it. One is judicially. We have already filed with the Supreme Court, and a number of government agencies including SEBI and RBI and others are in the Supreme Court right now to clarify exactly how Aadhaar can be used and not used and so on. So there is a judicial resolution of this matter that might be possible. We are also considering legislative resolution of these matters, and there have been a lot of discussions on how exactly to get a legislative solution for the problem that we are facing right now for the use of Aadhaar. So we are looking at both dimensions. Obviously, we pushed the executive side as far as we possibly could. And now
but legislative side?
No. So the legislative side is what we are going to try now. As I said, from the executive perspective, which is how the UPA was effectively doing it and how we've tried to do it so far, is to push it as far as we can. But now we've got to make sure we get a judicial resolution if we can. And if that is sufficient, then that's good enough. If that's not sufficient, then we have to go to the legislative side as well.
That's how the government is trying to tackle the clarity that is needed around Aadhaar. Let's get back to Ashmit, more news coming in from the Supreme Court. The Apex Court today questioned the government on the issue of call drops. You know, Ashmit, earlier we've heard the government saying, penalties are under active consideration, but today it informed the Supreme Court is working on a new game plan. What's that new plan?
Indeed, now, even as the Supreme Court was hearing the applications as far as the spectrum auction is concerned, again, the issue of the ghost of call drops was again raised. The Apex Court this time questioning the government on the actions that the government is currently contemplating to address the issue of call drops. Now, the government came out all guns blazing, pointing the fingers squarely at the telcos. And now the government stance is two-pronged. One, they argue that as far as technologies, as far as addressing the issue of call drops is concerned, there are technologies available with the telcos that are not being deployed. That's the first charge that they've put at the telcos, arguing that there are remedies available that the government, that the telcos at this point are not exercising, and that the second charge they of course levied was that the concerns cited by telcos on various instances has been the cost that they were likely to incur. But the government has also argued that there is also a commensurate increase as far as their revenue is concerned. That's the second charge that they've put forth as far as telcos are concerned. As far as their own understanding and their own game plan is concerned, the government has reiterated now before the Apex Court and said it in as many words that even as they are currently mooting, including various conditionalities as far as call drops is concerned, when they next come out with the NIA or the notice inviting application for the next round of auctions. So clearly the government now getting into a more aggressive tone, arguing that perhaps this is the best road forward, adding more conditionalities into the NIA. The telcos of course have defended their position, arguing that before the Apex Court in fact, that as of now there is no uniform tower policy in place which adversely affects them, and that various jurisdictions address the issue of towers in various different ways, and hence affecting their ability to go ahead and to enforce these towers. So that's a concern that telcos have put forth, but essentially the takeaway here being that the government clarifying its position that NIA could perhaps play host to a few conditionalities going forward in the next round of auctions as far as call drops is concerned. Back to you.
You know, we're talking about ease of doing business and making things simpler, and then we're adding more complex layers as far as doing business is concerned. But you know, this is a matter that's been going back and forth now between the DOT, the minister, and of course the TRAI, as well as the cellular operators, and we haven't seen any forward movement despite all the talk on that cell tower policy that the COAI has been demanding, and the government has said that they've actually moved on. So I'm not sure where we are finally going to end on this issue of call drops, so perhaps this is another matter that the Supreme Court is going to intervene and have to take forward. But speaking of India's complex sectors, the aviation industry can contribute $250 billion to the GDP by 2025. But there are several caveats to being able to achieve that number. For that to happen, we will need a raft of reforms, and that is the crux of a report released by the Center for Asia-Pacific Aviation, or CAPA, today. New airlines like Vistara have raised the pitch to scrap the 5x20 rule, which is essentially the rule that does not allow carriers like Vistara or AirAsia that don't have 5 years of operating experience in the country and don't have a fleet of 20 aircraft to fly internationally. Sindhu joins us now with more. Sindhu, the top takeaway there from that meeting, and of course the report put out by CAPA, is that you need to unshackle the Indian aviation sector.
From day one, Vistara has been lobbying for removal of the 520 restriction, which does not allow it to fly overseas unless it has completed 5 years of Indian operations and has a fleet of 20 aircraft. It has been saying that this is a restrictive rule, and lifting it will not only help Vistara but help all other Indian airlines, since 70% of India's overseas traffic right now is carried by foreign airlines due to this restriction on domestic carriers. Today, the airline says that its future expansion will in no way be affected on whether 520 stays or goes, but obviously a lot of future plans, especially in the international market, will depend on whether the 520 restriction is completely lifted or lifted in phases. We heard from our sources that in the draft civil aviation policy, which is expected to be out very soon, the government might give several options, and one of those could be that new airlines like Vistara are allowed to fly abroad immediately as long as they commit to increase domestic connectivity for a stipulated time period. If that happens, Vistara and AirAsia India will certainly benefit.
We think everyone needs to realize that today 70% of India's international air traffic is being carried by foreign airlines, and India is able to only utilize 26% of its bilateral traffic rights. That cannot be in the interest of Indian carriers or of the Indian nation. So if the 5 and 20 rule is not achieving its outcome, then we think we need to revisit that rule.
Well, that's Mukund Rajan of Tata Sons there talking about the need to abolish the 5/20 rule. It's been controversial to say the least, and even the new draft policy that the government is talking about doesn't give clarity on which way the government is likely to move. But let's talk about another vexed issue, and that is the issue of the state of the air in Delhi, that is India's capital. The total number of trucks entering Delhi is 70% more than the Municipal Corporation of Delhi's estimates. Now this, according to a new survey conducted by Delhi-based non-profit organization, the Centre for Science and Environment, which debunks the official number of trucks entering Delhi. Joining us now to take us through those findings is Sunita Narayan of the Centre for Science and Environment. Sunita, appreciate you joining us here on India Business Hour. This is a story that everyone, not just in the capital but in the country, is concerned about. This is an issue that the Supreme Court of this country is looking into at this point in time. The CSE study debunks the official number put out by the MCD, and you're saying that the MCD estimates are actually 70% lower than what the reality is. What are you basing your assumptions on?
Shireen, we actually hired a company which does such counting of traffic and does it for all major highway projects, and they actually counted the number of trucks, both light duty and heavy duty vehicles, that enter Delhi at 9 of its main entry points, which is about 75% of the traffic. And what we found is that about 50,000 trucks enter Delhi every day. And what is even more worrying is not the fact that MCD is basically ending up losing toll money, because the data we got from MCD is the data that its toll concessionaire has given the agency. So very clearly in the cash dealing that happened, there is a lot of money that is not being accounted for. But that is not our concern. Our concern is the fact that this 50,000 figure of trucks means, when you compute it in terms of pollution load, it means that 30% of the particulate matter which comes from vehicular emissions, both cars within Delhi and cars coming into Delhi, of that total, 30% comes from trucks. That's a horrific figure, and that is why the amicus curiae to this case, Mr. Salve, has taken this matter to the Supreme Court. The Supreme Court is hearing this with some amount of urgency and worry. We need a pollution tax. We need to make sure.
I'll come to the recommendations. I'll come to the recommendations in just a bit, Sunita. But you know, how can the MCD get it so wrong? You're saying that the MCD estimate is 70% lower than the actual reality as per the CSE study. How do you believe the MCD can get its numbers so wrong, or is this deliberate?
Shireen, I'm not sure if you've ever stood at a toll plaza in the middle of the night when there are huge numbers of trucks piling up and there is huge amount of cash dealing that happens. I can assure you that it is not beyond belief that it is not MCD that has got it wrong, but it is the toll concessionaire. MCD has just put out its 127 toll booths which are entry into Delhi to a private company. The private company has won the bid at 550 crore per year, and so you have to understand that this is a business of cash dealings, and that is why one of our recommendations is that we need to move towards an RFID system so that we can also know when the truck enters and when it leaves. And this is something NHAI has been asking for, but can never get it done because there is such a lot of vested interest in the movement in making sure that the movement of trucks remains unregulated.
Okay, you've given us one of the recommendations that you are making, which is to basically move to an RFID system. But let's talk about some of the other suggestions and recommendations. And you pointed out, Harish Salve, which is the amicus curiae in this matter, has actually suggested a pollution tax, compensatory charge to be levied on trucks. Will this really address the problem, even if we do move towards compensatory charges, Sunita?
No, Shireen, it's important to understand why we proposed it and why Mr. Salve has put up this suggestion. The fact is that when we were trying to understand the truck traffic problem around Delhi, we found that you have to understand that the Supreme Court has actually asked for 2 bypasses to be made to make sure that the traffic doesn't have to come through Delhi. Both the bypasses have now been delayed by 10 years, and they continue to be delayed. Now, it is in that context that we were looking at other options. When we were looking at other options, we found that there are a number of toll roads that exist that could actually take the traffic out of Delhi. But the reason the trucks were not taking these toll roads was because the price of using these roads is much higher than to come through Delhi. So I'll give you an example. On the western side of Delhi, we have NH71 and NH71A, which are tollable roads built by NHAI, by a private concessionaire. They're available. But if a truck was to move on those roads, it would be about 1,000 rupees, 1,400 rupees. Coming through Delhi, it's 400 rupees. The distance is not much different. One is 171 kilometer, one is 163 kilometer. So what we are essentially saying to the court is that we need to put a charge on coming through Delhi as a disincentive, but also as an incentive for trucks to use other roads which are charged based on NHAI rates. And we are saying that Delhi needs to pay for the congestion, the pollution, also to treat Delhi internal roads, therefore, as tollable. So we are not asking for something which should make transporters go running to the Surface Transport Ministry, as I would expect them to do so, and start crying all that they are going to be hurt. We're simply asking for the basic formula of the market to be used to say that your commercial traffic, if you use other roads, you will pay that toll. If you use Delhi roads, you pay that toll as well. That's all we are saying. I don't think it's wrong, and I think Mr. Salve has made a very convincing argument in court on this issue.
Well, we'll see what the court has to say on that front. But Sunita, my final question to you, because one of the other recommendations is moving faster on implementing the Bharat Stage 4 standards by January 2016, and that is what the CSE is pushing for. Given the current debate, and this is a global debate on emissions, given the Volkswagen controversy that's broken out, do you believe that there is going to be more pressure on the government to move as far as higher emission norms are concerned, and more urgently?
Shireen, please forgive me for being very blunt on your program, but I'm very clear. The large diesel manufacturers in India, and I will name them, the Mahindras, the Tatas, the Eicher, and the Leyland, who make commercial vehicles for India, are completely dinosaur companies. They are not prepared to move to the new age. We are 10 years behind Europe. Diesel technology in India is dirty. It is polluting. And they have put enough pressure on the Ministry of Surface Transport, on Mr. Gadkari, so that now the draft from his ministry is that these will only come at the earliest in 2017. That's too late. So I'm very clear, Shireen, the powerful diesel interests in India will make sure that you and I choke to death. And that is really the bottom of the air pollution issue that we are seeing in Delhi.
Well, I can't agree there with you. I can't agree more with you on that issue. There is need for urgent action, Sunita Narayan, and appreciate you joining us here on India Business Hour and taking us through some of the recommendations that are being discussed in the Supreme Court, in the highest court of this country, on how to tackle pollution in India's capital. Thanks very much for joining us.